That's going to be it for right now. Let's bring in our next guest, or our only guest for the other day, Craig Bolanos. He's co-founder and wealth partner of VestGen Wealth Advisors in Chicago. Craig, before we get started, I noticed that you were put up for an award, a pretty prestigious award, as a matter of fact. And I'm going to give you about 20 seconds to tell us the award that you were that was bestowed upon you, and give yourself a chance to kind of crow a little bit.
Hey, I appreciate that very, very much. I was ranked as one of the top investment advisors according to InvestmentNews for 2026. I came in the number 3 spot. The heck with that number 1 and number 2. I got the bronze medal this year, but listen, Scott, I appreciate the plug, and I wouldn't do it alone. It's the entire team at VestGen Wealth Partners that makes this work for our clients across the country.
All right. Now, I'm assuming you've just seen GDP. I don't have it up yet, or not GDP, PPI. Do you have a PPI number for us?
I do not have a PPI number, as I am remote here today. I apologize for that, but I can tell you this.
No, that's right.
Right? I can tell you this real quick. Everyone's looking at the smart money right now. The smart money is the bond money. And whether we look at the 3-month, we look at the 2-year, we look at the 10-year, I pay attention to that 10-year. And what that 10-year Treasury is telling me, despite what you might see with a market all in red this morning, we're still pricing in a relatively healthy economy that's continuing to expand, even though we got that weakness in the jobs market. And up until that 10-year starts signaling something else, I'm not running to Recession Island anytime soon, nor should you.
No, I'm not. Okay, but here you go. PPI month over month, we were looking for 0.3. It came in at 0.5, slightly hotter. The core PPI month over month, we were looking for 0.3. It came in at 0.8. If you want to go a little deeper, the core PPI year over year was expected to come in at 3% on the nose. It came in at 3.6%. And we've got a PPI, the PPI for the year, not core, but just a regular, was expected at 2.6, came in at 2.9. That's already got the equities on the run to the downside, as you can imagine. That's probably going to make folks think about these rate cuts again and whether or not we're going to get any. We reported yesterday on Austin Goolsbee saying from the Chicago Fed that he doesn't think we should cut anytime soon. Is this going to kind of pour a little cold water on anybody that thinks they're going to get a cut right away?
Well, listen, I mean, the market has widely discounted. No one's been believing that we were getting a cut in the March-April timeframe. Those cuts don't come until summer, more likely fall at best. You got to respect Goolsbee. He's been spot on with some of his comments over the last 2.5 years. And a PPI that comes in as a run hot. Everyone worries a little bit. You and I have talked about a potential run hot economy. Let's be clear. SCOTUS can do what the Supreme Court can do what they want, but we still have these tariffs. So if anyone's surprised that PPI is coming in a little bit elevated, I don't think they should be overly surprised. But I also don't think we're in the danger zone, because any 1 month, any 1 quarter doesn't make a trend. I understand some of these comparisons month over month are going to be a little bit difficult, but I think we'll digest this here and move forward. What I'm focused on is the consumer, because that's what drives this U.S. economy. And Scott, those refund checks, those direct deposits, they're on their way. And I think that is coming exactly at the right time to keep the party going for the U.S. consumer.
Yeah, we had some good news with consumer confidence as well. It looks as though things are turning around, or maybe it's just in time for those refund checks to hit, because we need to really start to attack the money in the customer's wallet and pocket, because that's how we're going to get over some of these higher prices that the customer has been having to pay, because we just haven't been able to get a hand on inflation. The prices are still rising. That's a problem. We don't want to try to engineer a deflationary cycle, because every lawmaker out there, everybody in Congress will be worried about what that would do to the economy and the GDP and any recession talk like you just said. But I think you're right, the economy is doing well. We're going to have to digest these. This PPI number can be pretty volatile too. It's not as well followed as the CPI. The PPI, just for the folks out there listening, that's the producer price index. These are the prices that Walmart and Target pay the people that make the stuff, the manufacturers. Those are what those prices are. The CPI, the consumer price index, is what's really widely held as our inflation rate. That's what we pay Walmart and Target. So just to give everybody an idea about how that comes downstream. So this one can be pretty volatile. We'll see if we get a big reaction. But right now, I can tell you that we've lost another 100, 150 points in the Dow as we speak. So Great to have you on, Craig. Always really, I mean, Friday mornings are great because we usually have some decent economic news to talk about. So we're never short of things to talk about. And once again, a lot of people say when I go traveling, and I'm going to be traveling next week, Monday, Tuesday, Wednesday, I'm going to be in Peoria, Illinois, speaking to a big group there, Corn Belt Marketing. But I will say this, they always come up to me and they say, you have the best guests in the business on the Cow Guy Close. And I know I do. And you're one of them, Craig. And that award that you just won is proof positive that you know what you're doing. And we have a lot of folks at the Cow Guy Close that write in and tell us they love what you have to say. So keep up the great work. We really appreciate you. Thanks for coming on and have a great weekend. Craig Bolanos, he's a co-founder and wealth partner at VestGen Wealth Advisors in Chicago. All right.